Okay, so this is the slide that I'm going to talk about for a little while and then open up to questions. You're probably all becoming a little bit au fait with this, it's always in the news, that the banks will no longer roll over interest-only loans. Now, there's a massive thing, 13 billion coming up in the next 12 months, which will have to be transferred onto principal and interest. Somehow we managed to either fluke or good management 3 rollovers in the whole year. It's not easy, and I think it's going to get harder and harder with regulation, etc. This is obviously coming down the funnel of the Reserve Bank, wanting debt ratios lowered in New Zealand, obviously, and that's what's happening, the pressure being put on. So the difference between a principal and interest loan and an interest only is massive, which I'm going to show you on the next slide. The test is obviously you should never be paying off good debt until all bad debt is gone. We all know that. And this forcing investors to pay principal and interest while they've still got a mortgage on their own or occupied, in my opinion, is actually not in terms of the Responsible Lending Act. But I'll get into that in a minute. So this is a direction that's actually technically and responsibly incorrect. So a typical ANZ mortgage, 500,000, 409 is actually 395 now, but anyway, you'll be aware of that. But when I did this, it was 409, so it's gone down even further. So that's 393 a week. Then, so you get your 10 years, and now it's actually 5, but you get your 10 years, so suddenly you've done 10 years on your interest only, it's converting over, so then it's got 20 years to go, so that goes on to principal and interest over 20 years, and you can see with those numbers it nearly doubles, it goes up to by about, I think that's 311 per week, which is just huge. It's got can't say the word tonight, ramifications for cash flow, and it may even make the loan unaffordable depending on your circumstances at the time. So you just need to review your mortgages very regularly, see when they're coming up for renewal, and be prepared to sit down with me to look at repositioning or having a go at and trying to convince the bank to do a rollover. But as I say, it's a very, very difficult thing. This is extremely simple. If the banks or the Reserve Bank still want debt coming down, that 311 should obviously go onto a home loan. So they could covenant that. So that is what a responsible lender would do. So this is my big hobby horse because I'm so against this. Yeah, okay, put it on to principal and interest, pay the extra 311. The test rate has been already tested, so the client can in most cases afford it, but doesn't go into that loan, it goes into the owner-occupied loan, because that's bad debt, and we all know that you should pay off all bad debt until you start paying off good debt. So that's what they're doing wrong, but they don't seem to listen. So that's my gripe for the night, and it's just a thing that is going to continue. It's not going to change because I don't think the Reserve Bank will allow it to change.